We're currently in the longest shutdown in U.S. history. And interestingly enough, the markets are still at all-time highs. We've had about 20 shutdowns since the 1970s. So this is nothing new. The markets kind of know how to digest this and move forward. So instead of a panic, markets just kind of yawn at it. But one of the tricky parts for markets is when the government is shut down, those agencies of the government aren't producing some important reports. We don't get GDP numbers. We don't get inflation reports. We also don't get payroll reports. And those are important factors, especially for the Fed, to make policy on. The Fed did cut rates last week, so they did make a major decision without that. But they did say going forward that if the government shutdown drags on December, it's going to be less likely that they make a December cut. So the percentage, we went from almost 100% chance of a rate cut in December now down to 60%. Personally, when I heard that, I thought, with the government shutdown, that makes consumers less likely to spend, businesses less likely to spend, kind of would cause a slowdown and there'd be a higher chance. But, the Fed just doesn't want that uncertainty to make big policy decisions without actually having the data to back it up. The market didn't like that. We did see a little bit of a pullback, but since then we've rebounded. But overall, unfortunately, the chance of a cut did go down a little bit for next month.